Jai Shri Gurudev. Welcome back to my YouTube channel. This is Ravian, Assistant Professor, Department of Commerce and Management, BGSIMS, Chikaballapur. So, dear students, in this video I am going to explain the problem under income from house property. So, that is calculation of gross annual value or income from house property. Okay, that is in the head, income from house property. So here is the question. First let me explain the question, then answer. Okay, so here is the question. So Mr. Sarvana is the owner of a house. The particulars are as follows. So Mr. Sarvana is a assessee in the question and is the owner of house property, and certain particulars is given below. So that is firstly municipal value, and that is 1 lakh rupees is given. Municipal value 1 lakh rupees is given. Fair rent, it is also known fair rental value, 1,30,000 is given. And next standard rent, that is 1,10,000 is given. Actual rent, that is 10,500 per month. So 10,500 per month is given. You have to multiply with 12. 10,500 into 12. And unrealized rent, that is 10,500, which means the rent is not realized in the month. So 1 month rent is not realized in the question. Vacancy period 1 month. Okay, so vacancy period loss will be 10,500. And next, municipal tax paid by the tenant. Municipal tax paid by the tenant, that is 2,000 rupees. So here this point is very important. You have to keep in mind that municipal tax paid by the owner must be deducted, or municipal tax paid by the owner is deductible. If the municipal tax is paid by the tenant, it is not deductible. Okay, so I repeat, municipal tax paid by the tenant should be ignored, and municipal tax paid by the owner should be considered, and that must be deducted. And next, to determine the taxable income from house property for the assessment year 2019-20. So this is a question, very simple. Okay, so all the relevant information is given in the question. So just you need to calculate the taxable income from the house property of Mr. Sarvana for the assessment year 2019-20. Okay, so let me explain the solution now. So here is the solution. So one by one I'll explain. First, you have to write the heading as we know. So just we need to write the heading like a computation of taxable income from house property. This is a heading. And assessee name Mr. Sarvana. His status is residential status of Mr. Sarvana is resident, and the previous year is 2018-19, and assessment year 2019-20. Okay, so this is a required information that you have to write before going to the answer. And next, so here particulars and amount. Even you can draw 2 columns for the amount also, or else in the particular column itself you can write the amounts of notional rent, fair rental value, and municipal rental value, and further calculations. Okay, so if required you can write 2 amount columns. So just I have mentioned only 1 amount column and 1 column for particulars. See, in the answer, so we already know that in order to calculate gross annual value, we need to compare 3 things: notional rental value, expected rent, and actual rent. These are the 3 things. Okay, notional rent, expected rent, and actual rent. First one is notional rent. Okay, in order to get the notional rent, so we need to compare these two: fair rental value and municipal rental value, FRV, MRV. See, fair rental value is given 1,30,000 in the question. Municipal rental value 1 lakh rupees is given. So whichever is higher in these two, 1,30,000 is the higher amount. So that is considered here, 1,30,000. Okay, and next, expected rent. So expected rent means notional rent or standard rent, whichever is less. whichever is less. So notional rent, so ನಾವೇನು previous calculate ಮಾಡ್ತೀವೋ, so that will be the notional rent. See, in the first step notional rent, that will be 1,30,000. So that is 1,30,000. So here we mentioned 1,30,000. And the standard rent, it is given in the question, that is 1,10,000. So in these two, which is the lesser amount? 1,10,000. So 1,10,000 is mentioned in the amount column. And next, actual rent. So in order to calculate actual rent, we need to compare expected rent and actual rent. Okay, so expected rent means, so before step, second step, that is 1,10,000. Okay, and actual rent, see, for this actual rent we need to apply the formula, that is, so I have shown in the note, that is actual rent, see, this is the note. Actual rent is equals to annual rent minus unrealized rent, minus if any cost of common facilities is given in the question, so you need to deduct that amounts also. Okay, so ಇಲ್ಲಿ ನಮಗೆ ಕಾಸ್ಟ್ ಆಫ್ ಕಾಮನ್ ಫೆಸಿಲಿಟೀಸ್ ಲೈಕ್ ಸ್ವಿಮ್ಮಿಂಗ್ ಪೂಲ್ ಮೇಂಟೆನೆನ್ಸು, ಸ್ಟೇರ್ ಕೇಸಲ್ಲಿರುವಂತಹ ಲೈಟ್ಸ್ ಚಾರ್ಜಸ್ಸು, ಪವರ್ ಚಾರ್ಜಸ್ಸು, ಮೇಂಟೆನೆನ್ಸ್ ಆಫ್ ಗಾರ್ಡನ್ನು, ಸೊ ಇದೇನಾದರೂ ಕೊಟ್ಟಿದ್ದರೆ, ಸೊ ಅದನ್ನು ಕೂಡ ನಾವಿಲ್ಲಿ ಕನ್ಸಿಡರ್ ಮಾಡಬೇಕಾಗತ್ತೆ. ಬಟ್ ಇನ್ ದ ಕ್ವಶನ್ ನೋ ಸಚ್ ಕೈಂಡ್ ಆಫ್ ಕಾಮನ್ ಫೆಸಿಲಿಟೀಸ್ ಕಾಸ್ಟ್ ಇಸ್ ಗಿವನ್, ಸೊ ದಟ್ ಯು ಹ್ಯಾವ್ ಟು deduct only unrealized rent from annual rent. So annual rent they have given 10,500 per month. So 10,500 per month is given, so you have to multiply with the total, so you'll get a amount. Okay, so 1,26,000 rupees is 1 year rent, annual rent, 10,500 into 12. And unrealized rent in the question they have given 10,500. So if you deduct 10,500 from 1,26,000, you'll get a 1,15,500 as a actual rent. So this is mentioned in the answer. So here, so actual rent 1,15,500. Okay, so expected rent is 1,10,000 and actual rent is 1,15,500. So whichever is higher amount is 1,15,500. So now, so this is the last, so 1,15,000. next further calculations will be based on this amount, 1,15,500. So now in that amount you have to deduct vacancy period loss. If any vacancy period loss is given in the question, so you have to deduct the amount of vacancy period loss. So in the question they specifically mentioned that 10,500 is the vacancy period loss. Okay, so vacancy period loss, so or else they may mention the vacancy period 1 month. So in that cases you have to consider per month what is the amount of rent. So in the question 10,500 is the monthly rent, so vacancy period 1 month, so that 10,500 will be the vacancy period loss. Now, so if you deduct the 10,500 from 1,15,500, you'll get a 1,05,000. So that is considered as a gross annual value. And then in the gross annual value you have to deduct municipal tax paid by owner. So specifically mentioned owner. In the question they have given municipal tax paid by tenant, so that is ignorable. So now municipal tax paid by owner is nil. Okay, and if you deduct that amount you'll get a net annual value. So in the gross annual value you have to deduct municipal tax paid by the owner, and final amount you'll get a net annual value, that is same amount 1,05,000. And next, in that net annual value you have to deduct the deductions under section 24. So here is the deductions. So deductions under section 24. So first deduction is, in all the questions you have to mention the standard deduction. So standard deduction 30% on NAV, whatever may be the amount of NAV, net annual value, so you have to deduct 30% as a standard deduction. So 30% on 1,05,000. So here I have shown calculations. So standard deduction, so 5,000 into 30%, so you'll get a 31,500 as a standard deduction. So that standard deductions has to be mentioned here. So 31,500. And next, interest on loan. So interest on loan also one deduction under section 24. Interest on loan, when this interest on loan comes under, so if the house owner taken any loan for the construction of house property or for the purchase or for the repair of house property, then the interest on loan will be comes here. Now in the question, no loan is taken, so that interest on loan is a nil. Then if you deduct these two deductions from net annual value, you will get a amount of taxable income from house property. So in this question, 73,500 is the taxable amount of income from house property. Okay, so this is taxable income from house property. I hope you understand. So here municipal tax paid by tenant should be ignored. I have shown notes. Okay, so this is the answer. Very simple. So these three things should be considered. First you have to calculate GAV, then NAV, then deductions. Three things. So for the calculation of GAV, you have to compare first notional rent, second expected rent, third one actual rent. Next, less vacancy period loss, you will get a gross annual value. In that, if you deduct municipal tax paid by the owner, you will get a net annual value. Then deductions under section 24, one is standard deduction, and that is 30%, and second interest on loan. So if you deduct these two deductions, you will get a income from house property. Okay, so hope you understand. Thank you all. Jai Shri Gurudev.